Greetings, Stock Explorers, and welcome. Today we're doing a deep dive just for you into Iovance Biotherapeutics. That's ticker IOVA.
That's right. We're going to unpack the recent news, especially that really significant stock drop we saw on May 9th.
Yeah, a lot happened there. So our focus today is really understanding why that happened, what factors were behind it.
Exactly. For those of you watching the biotech space, this Iovance news was pretty jarring. We need to look carefully at what went wrong and what it means going forward.
Okay, let's jump right in. The main event was that stock plunge on May 9th, but things really started moving the night before, May 8th, right? After hours.
Precisely. So the stock closed at $3.13 on May 7th. Then, after the market shut on May 8th, they dropped their Q1 results.
And that's when things went south.
Dramatically. And after hours trading, the price just plummeted. We saw reports putting it somewhere between $1.78 and maybe $1.90.
Wow, that's a huge drop overnight. What does that work out to, percentage-wise?
We're talking roughly 40%, maybe even closer to 44% down, somewhere like 39.3% to 43.9%. It was a massive sudden shift in how investors felt.
Yeah, you don't see that every day, and I imagine the trading volume was pretty intense.
Oh, absolutely. On May 8th, the total FI&RA volume was almost 8 million shares, 7,944,138 to be exact.
And a lot of that was short selling.
A significant chunk, yeah. Over 3.3 million shares were short volume. That tells you some people were betting hard on the price going down further.
And how does that compare to their usual volume?
Well, their average daily volume in 2025 was around 2.18 million shares. So May 8th was way above average. Even May 7th was high, over 8 million too. But that after-hours plunge on the 8th combined with the volume, it was a clear signal.
Especially when you remember where the stock has been. What was the 52-week high again?
It hit $15.11. So yeah, falling below $2 really puts this drop into perspective. It's a major setback.
Okay, so the market reaction was severe. Let's get to the cause. What was in that Q1 earnings report that set this off?
It was really a double whammy in the report. First, the revenue numbers. They reported total product revenue of $49.3 million for Q1.
And how much of that was their main drug, Amtagvi?
Amtagvi brought in $43.6 million, and Proleukin added $5.7 million.
Okay, $49.3 million total. How did that stack up against what analysts were expecting?
That's the problem. Analysts were looking for something in the range of $80.5 million to maybe $83.3 million.
So a huge miss, almost 40% below expectation.
Yeah, roughly 39% to 41% short. A really significant revenue miss.
And you said a double whammy. What was the other part? The earnings per share?
Exactly. They reported a net loss of $116.2 million, which is 0.36 per share.
And forecast.
Analysts were predicting a loss closer to $0.24 or $0.25 per share. So the loss was quite a bit wider than anticipated.
How did that compare to last year, Q1 2024?
Well, the total loss was similar, actually. $113 million last year, which was 0.42 cents per share then. But beating expectations is key, and they missed badly this time on the per-share loss forecast.
Right. So, revenue miss, bigger loss than expected. That's bad enough. But there was something else impacting the future outlook, wasn't there?
Yes, and this might have been the biggest shock for the market. It was the guidance revision for the full year 2025.
They had just given guidance back in February, right?
They had. They'd reiterated guidance of $450 million to $475 million for the year. Pretty bullish.
And what did they revise it to now?
They slashed it. The new guidance is $250 million to $300 million.
Wow. From a midpoint of over $460 million down to, what, $275 million?
Exactly. It's a cut of anywhere from 33% to 47% compared to the midpoint of the old guidance. That's a massive reduction.
And that signals the Q1 problems aren't just a blip. They expect them to persist.
That's certainly how the market read it. It suggests the issues they faced are deeper and will impact the rest of the year significantly.
Okay, so let's dig into those issues. What reasons did management give for this underperformance?
And they pointed to a few main things. First, they mentioned scheduled annual maintenance at their manufacturing facility, the ICTC, back in December 2024.
Okay, so that would impact Q1 production capacity for Amtagvi.
That was the explanation. They said it reduced capacity in Q1, but that full production is back online now.
Okay, that makes sense for a temporary dip. But it sounds like there were other, maybe more systemic issues too.
Yes, indeed. They also talked about slower than expected growth at the authorized treatment centers, the ATCs.
These are the hospitals and clinics actually giving the therapy.
Correct. They said it's taking longer than planned for new ATCs to get up and running and start treating patients. They have over 80 ATCs in the U.S., but getting them all fully operational seems to be a bottleneck.
So getting the centers ready is one thing, but were there issues with the actual treatment process or manufacturing beyond just the maintenance?
Yes, and this is pretty critical. Management acknowledged higher rates of patient drop-off and lower manufacturing success rates during Q1.
Patient drop-off meaning patients starting the process but not getting the infusion.
That's likely part of it, or perhaps delays leading to patients becoming ineligible, and lower manufacturing success rates. Well, that directly hits supply.
Do they say things are better now?
They did claim these metrics improved in Q2, but the fact they happened is a concern. Manufacturing these TIL therapies is complex. The current turnaround is about 34 days, and they want to shorten that. Any failures or drop-offs directly hit revenue.
And what about their other product, Proleukin? Did that play a role?
It did contribute to the miss. Proleukin sales were lower than expected too.
Any reason given for that?
Management said it was partly due to wholesaler inventory levels. They expect replenishment in Q2, which should align better with Amtagvi demand picking up, assuming it does.
Okay, so it's a mix.
No.
The planned maintenance hit, ATC ramp-up slower than hoped, plus unexpected patient drop-offs and manufacturing hiccups, and a bit from Proleukin inventories. You could see why the market reacted badly.
Absolutely. It paints a picture of operational challenges during a critical launch phase.
So beyond the stock price tanking, what was the reaction from analysts? You mentioned the price drop.
Right. The after-hours plunge was immediate. Then analysts started weighing in. Citizens JMP, for example, downgraded the stock
From what to what?
from outperform down to market perform. And interestingly, they didn't give a price target with the downgrade.
Which usually signals.
A lot of uncertainty. It suggests they find it hard to predict where the stock should be valued right now, given the news.
Makes sense. Was there any counter perspective? Anyone still optimistic?
Well, there was some analysis suggesting that even after the drop, the stock looked undervalued, but that same analysis highlighted a huge range in analyst price targets overall, from as low as $5 up to $32.
$5 to $32. That's an enormous spread.
It really shows how much disagreement or, frankly, uncertainty there is among experts about Iovance's real value and recovery potential right now. Before this report, sentiment was generally more positive, lots of buy ratings. Those are likely being revisited now.
You bet. And on the earnings call itself, what were analysts drilling down on? What were their main questions for management?
They were really focused on the how. How exactly are you going to improve manufacturing success? How are you going to speed up the ATC performance? And they wanted much clearer explanations for why the revenue miss was so big and why the guidance cut was so severe.
So basically asking for a concrete plan to fix the operational problems.
Exactly. The market needs clarity on the path forward and confidence that management has a handle on these execution issues.
Okay, let's talk about those operational challenges more deeply. Amtagvi manufacturing, you said it's complex. What makes it so tough?
Well, it's an autologous therapy, meaning it's made individually for each patient from their own tumor tissue, specifically tumor-infiltrating lymphocytes, or TILs.
So it's highly personalized medicine.
Extremely. The process starts with the patient's tumor, happens at that central ICTC facility.
No.
It's intricate. They're expanding capacity there, aiming to go from treating 1,300 patients a year up to 5,000. That's good for the long term.
But the Q1 issues show that just having capacity isn't enough. You need consistency, right?
Absolutely. Consistent manufacturing success is paramount, even at the current scale. They need to figure out the root causes of those lower success rates they saw.
So what could they do? Refine processes? Tighter quality control?
All of the above. Maybe more automation, better process analytics, anything to reduce variability and boost the yield. And as we mentioned, shortening that 34-day turnaround time is also really important for patients and efficiency.
Makes sense. Now, on the commercial side, the slow patient uptake at the ATCs and the drop-offs, what can they realistically do there?
That's another key area. The slow ATC ramp-up and patient drop-offs point to friction in the commercial launch. They need to figure out the specific bottlenecks.
Like, why are new centers taking so long to activate?
Right. Do the centers need more support, better training, streamlined processes? Maybe focusing on getting the highest volume centers running smoothly first is a good strategy.
And the patient drop-off issue.
They need to understand why that's happening. Is it the disease progressing too quickly? Are there logistical barriers for patients? Are expectations not being managed properly?
So potential solutions could be better patient screening, more education, stronger patient support systems.
Exactly. Things to smooth the path for the patient from referral to infusion and reduce the chances they fall out of the process.
Okay, so internal operations are key, but they don't operate in a vacuum. What about the competitive landscape and their financial health? How do those factor in for you, the Stock Explorer?
Good points. Competitively, Amtagvi has that first mover advantage in advanced melanoma, which is valuable. But cell therapy is getting crowded. Flawless execution becomes even more critical when competition heats up.
And the earnings miss definitely hurt investor confidence.
No doubt. They need to show a clear path back to growth and eventually profitability to win that back. Financially, they ended Q1 with $366 million in cash.
Which gives them some runway.
Yeah, management projects that last into the second half of 2026. And they guided for cash burn under $300 million this year. So near-term solvency seems okay.
But what about profitability on the product itself? That gross margin seemed low.
That's a big flag. Only 10% gross margin on Amtagvi in Q1. They expect that to improve dramatically to over 70% in the coming years.
But that depends entirely on fixing the manufacturing inefficiencies, right?
Absolutely. Achieving that higher margin is crucial for long-term sustainability, and it hinges on resolving these operational problems. More setbacks could really pressure their finances.
So given all this, what's management saying they're focusing on now? What's their strategy to turn things around?
They're highlighting three main areas. First, manufacturing optimization, trying to boost infusion volumes in Q2, which implies fixing those success rate issues.
Okay. Second,
Expense management. They plan to keep manufacturing headcount flat in the second half of the year, so controlling costs while trying to improve output.
and third,
Continuing to work on the ATC network, focusing on those high-volume centers and getting them performing optimally.
and looking further out, what are they pinning their hopes on for growth?
Well, continued Amtagvi adoption, obviously. They still reference that potential for over $1 billion in peak U.S. sales, though that seems further off now.
What else? International expansion.
Yes, that's a big one.
Yeah.
They expect approvals in the UK, EU, and Canada this year, aiming for about 15 ex-US treatment centers by year-end, plus named patient programs and filings elsewhere like Australia and Switzerland.
And the pipeline. Anything else coming through?
They still emphasize the pipeline.
Mhm.
The lifileucel combo with pembrolizumab for frontline melanoma, lifileucel for lung cancer, non-small cell lung cancer, expecting phase 2 data later this year, maybe an FDA decision in 2027.
Any other indications?
Also, lifileucel in endometrial cancer with phase 2 results also expected in the second half of this year, and then their next-gen TIL therapies further down the line.
So they're sticking to the long-term vision and the cash runway guidance.
They are, but, and it's a big but, hitting those goals, hitting the margin targets, it all comes back to fixing the current operational issues and rebuilding that investor trust.
Right. So just to wrap this up for you, our listener, Iovance hit some major operational speed bumps with the Amtagvi launch.
Yeah, manufacturing and commercial scaling challenges led to that big Q1 miss and the guidance cut, and the stock took a beating as a result.
The core problems seem to be getting the complex manufacturing consistent and getting the treatment centers firing on all cylinders.
That sums it up well. They need to prove they can execute reliably now, even at the lower projected levels for this year.
And it feels like just talking about future potential isn't going to cut it anymore. Investors like you need to see results.
Exactly. Tangible improvements. Better manufacturing data, rising treatment numbers, hitting those revised financial targets quarter after quarter. That's what it will take.
It's definitely a show-me story now, as you said.
Yeah.
They need to demonstrate they can execute consistently to unlock the potential everyone saw in their therapies.
Precisely. The path is there, but execution is everything now.
Well, thank you for breaking all that down for us and for our listeners today. Really insightful.
My pleasure. Glad I could help shed some light on it.
And thank you, Stock Explorers, for tuning into this deep dive on Iovance. Hopefully this gives you a clearer picture of what's happening and what to watch for.
Indeed. Thanks for listening.
Don't forget to subscribe to the channel, like this analysis if you found it helpful, and hit those notifications so you catch our next exploration of key market moves.